The OB3 has been passed, and within it, there is a new deduction that is for vehicle interest. So if you have a vehicle that is new, that you are the original owner, and it is the original loan, and you are paying interest on that, you may be able to deduct that vehicle interest that you're paying from your taxes. Now, this is a deduction that is new to me. I've not seen this in my time as a tax accountant, as a CPA. This is new. In general, the only people who are allowed to get benefits from their vehicle interest are business owners, real estate investors that are using the vehicles primarily for business. But this one applies to all Americans, to US taxpayer who can qualify. Now, there are some exceptions for high earners. There's phase outs. Let's just dive through it quickly. So a few of the highlights on this. So up to $10,000 of vehicle interest is potentially deductible. Now, this does not impact your itemized deductions. If you're taking the standard deduction, you can still take the vehicle interest deduction. It has to be a new vehicle, or you have to be the original owner. It has to be the original loan on the vehicle, and the vehicle has to be, the assembly has had to be finished in America. So those are a few of the rules here. Now, there are phase outs for high earners. If you earn more than $100,000 in taxable income as an individual taxpayer, or $200,000 in taxable income as a married filing joint taxpayer, you will start to phase out as far as how much deduction you can take. And once you earn a certain level, you will not be eligible for this deduction. And the last piece, and probably one of the biggest pieces, is this is a temporary deduction that's included with this bill. It's for 2025 through 2028. So timing this up is going to be interesting, especially as we get to 2028. We may see some spikes in car purchases as we get into 2028. But again, it's, if you've got it, take it. Big proponent of don't go a vehicle loan just to get a vehicle loan. The interest deduction on your taxes will not be worth the interest that you pay. But weigh this into your decisions, right? Because if it comes to, hey, I could take this vehicle loan at a certain percentage and I get after-tax benefits to that, doing that allows me to use my cash and my other funds for something more advantageous, then yeah, maybe it is more advantageous. So understand what it is, understand if and how you can use it and if you want to use it, and then be sure that you are using it when you can.